You are about to make the biggest mistake of the cycle, ignoring the setup while whales quietly position for a full-blown melt-up. Right now, my friends, central banks are squeezing global liquidity. ETH whales are accumulating harder than ever accumulated in years, and altcoin liquidity is about to snap back with violent force. BTC inflows may be slightly collapsing right now, but Coinbase is still front-running Total 2, and fund managers are just nuking their dollar exposure. I'm going to explain what all this means and why it's going to pump Pulsechain 10,000x towards the end. Okay, this is not noise, this is the precise macro cocktail that ignites generational upside. So stay tuned right until the end. Like, subscribe, comment. Let's get onto it. No time to waste. This chart is very important, okay? And this has never happened before. All four major central banks are shrinking liquidity at the same time, and there's a huge micro warning right here, okay? What this chart shows us is, if you're looking at total monthly asset purchases from Fed, ECB, BOJ, and BOE, each spike means what? Money printing, and the dips are liquidity withdrawal. As you can see on the right, we had liquidity withdrawal end, and then we had that massive COVID spike, and liquidity withdrawals here on the right, 2025, are probably at the bottom right now. And so they're still in tightening mode, but the tightening mode is ending, and we're going to loosen the economy very soon. And this is important because these liquidity contractions and expansions precede what? Especially the contractions, they precede massive risk off to risk on moves. So 2008, 2018, 2022, etc. And we are about to enter that same zone where things are going to start shifting. And as you saw on the right there with COVID, it's probably not going to be a spike like that, but when things shift with BTC near all-time highs and altcoins looking for direction, I mean, everything is set up for the biggest bull market in crypto we have ever seen. Then we have this chart right here. Fund managers have never been this bearish on the US dollar in over 20 years. That's a massive shift, and it's probably going to spark one of the biggest capital rotations of the entire cycle. So this is the BofA Fund Manager Survey tracking USD sentiment, and the percentage of managers that are overweight the dollar is at the lowest it's ever been since even stuff like, for example, COVID, okay? Even COVID. This is important because it's the start of a global reflation trade. This is what it looks like. The dollar weakens and the interest rates are going to flatline, and then capital is going to flood into risk on assets, BTC, ETH, and then high beta alts, and that's where I'm going to get towards the end with Pulsechain, especially with the Swiss National Bank back to 0% and the Fed is soon going to pause. This is going to trigger a chain reaction. With everything I've been saying in mind, we have to look at BTC demand, okay? This chart tracks apparent demand for BTC, how much Bitcoin is actually being absorbed after subtracting minor issuance and also inactive supply. And so the green bars equals bullish demand, red bars equals net negative flows, and we just crossed back into red like we did there in approximately end of February, beginning of March, okay? Why is this important right now? This is not a full breakdown yet. It's just a warning. If demand keeps falling while price stays elevated, it's going to be a very fragile, very volatile market, and even small setups could spark liquidation cascades. And so even if we get like a small correction on BTC, if you look at everything happening macro-wise, everything is getting set up towards that explosive move. I'm not saying Bitcoin is going to correct. I'm saying if you see a correction, it's probably going to be the last one, okay? Any dips you get in this market, you should be stressed out buying all of these dips, because once the market actually goes and we go into full parabola FOMO greed mode, it's not going to stop. If you actually do get good entries on BTC, ETH, Pulsechain, some of these alts, it might be your last dip. So that's my warning if we do enter a little bit of a smaller demand in the next month or 15 days, which by the way, I don't believe in. I actually think we're going to go higher this month and the next. Summers are usually good for crypto. Now we have this chart, okay? We're looking at BTC's price action at the top, and then the open interest in the middle, and then the funding rates at the bottom. And the green vertical spike in open interest, what does it mean? It's actually over 1 billion in new leverage rushing in as the price pushed past 108k, and we might even go to like 110k, which is where a ton of shorts get liquidated. Why is this important? This kind of aggressive positioning almost always leads to what? Added volatility. So either this is the beginning of an explosive breakout or the perfect setup for a massive liquidation squeeze happening soon, with demand, you know, going down a little bit, with open interest going high like this. If you do get a final dip, my friends, grab it, because it is going to be the final dip. But the truth here is the crowd still hasn't gotten euphoric yet, and things could even push a little bit higher, and you might not even get that much of a big dip, to be completely honest. But now let's look at this buy cycle chart. This is very important, okay? If you think BTC has stopped, I don't think you understand this chart, because it says you're insanely early still. Let's have a little bit of a wider view here. Instead of trying to predict what's going to happen this week or this month, let's look what's going to happen to BTC in the next year and a half, okay? The price signal still has not triggered yet. So we're tracking 2 two moving averages here, the 111-day orange one and the 2x, the 350-day on the green. So historically, when every major cycle top occurred, right when these two lines cross, okay? Tops are when these two lines cross. That's when you have like your sell signal, major top of the market, it's over signals, okay? Right now, we have no cross in sight at all. So we still haven't seen massive euphoria, FOMO, etc. And so this model is very important because it called the 2013, 2017, and also the 2021 tops almost to the day, okay? This is a very good, very important model. And today it's screaming only one thing. BTC has room to run, a ton of room. And we're possibly going to see the most explosive upside we have ever seen, ever. So nowhere near euphoric levels yet. And all the data confirms this. Now we are at 436 days after the halving. And if BTC follows any past cycles, you're still insanely early according to the BTC price after halvings chart. This tracks all 4 BTC cycles after each halving. And then the black line is 2024. And right now we're sitting at 108K. If we follow the 2012 cycle and the model, we should go to 3.6 million market cap BTC. I mean, I don't think it's going to happen. I think it's almost impossible, but you know, these are the projections if we follow and we scale the 2012 model. Now, one that's a little bit more likely is the 2016 model. I think a lot of people think this is possible, and that would put us at 399K, approximately, you know, very close to 400K at the top if we scale the 2016 model. Then we have the 2020 model, which if it's scaled, we will go to approximately 240 to 139K BTC. So the bearish cycle puts us at almost 250K. That's what the most bearish model shows us, to 239K to be more precise, if it's very similar to the 2020 model scaled. So this chart screams only one thing, very similar to the previous charts that I was showing, which is this cycle is lagging, and if it catches up, the upside, with everything happening macro-wise, with the tightening ending, with loosening situations here, we're gonna have an explosive upside, explosive bull market. So even though demand right now is shrinking, even though open interest is very high, I'm just telling you that, guys, this because it might be your last chance to actually get in on a dip if it happens. And then we have this Ethereum chart, very important because it goes from macro, okay, S&P, Nasdaq, etc., into BTC, and then from BTC into altcoins. So Ethereum is the most important one we have to talk about first, and then it goes from ETH, and I think the main altcoin still is Pulsechain. So let's talk about ETH first. Ethereum just saw one of the biggest buying spikes from long-term holders of all times, to be completely honest, and almost no one is talking about this. And so this chart tracks ETH price, which is the white line, and the number of accumulator addresses in blue. So during June, while the price was moving sideways, we had massive accumulation that spiked and surged completely vertically, okay? Crazy. We saw this yesterday, we saw this Friday, and we're seeing it today, okay? Whales are buying aggressively. They have some type of insider knowledge we don't know yet. They maybe know of some news that are about to come, some flows that are about to enter, but we're looking at aggressive whale style buying, while retail is distracted. No one has any Google searches on BTC, on ETH, etc. Guys, it's almost here. The bull market, the real bull market is almost coming. And this all leads us to the altcoin that I think is the secret sauce and that I think is at the bottom, and that's Pulsechain. The all-time lows were right here at 128 million market cap. Right now it's at 185 million market cap. Okay, we have some resistance lines. There's going to be some resistance all the way to the top, which means your entries to accumulate before all-time highs. After all-time highs on Pulsechain, it's just going to be a rocket ship. So let's say Pulsechain will do similar to, for example, Hex, which topped at 300 billion market cap. Let me just grab and do some quick moon maths right here, okay? What we are talking about in terms of potential gains on Pulsechain from the price it's at right now is 1.6kx. So if you put $1,000 here on Pulsechain, and if it does the same as Hex, which I think it can actually even do better, you have to multiply your $1,000 by 1.6k, and so your $1,000 will turn into $1.6 million, okay? This is what we're looking at when it comes to potential gains from right here where we are until the top. If this thing pulls a very similar move to, for example, Hex, you would be able to multiply with Pulsechain your gains from the bottom to 1.6k, 1000.6kx. Oh, Gustavo, you're crazy, you're insane. Hex did a 10,000x, okay? Cardano did thousands of x, Ethereum did 10,000x, Bitcoin did millions of x. This is the reason why we're in crypto, to catch the next 1000x, the next 10,000x, the next 100x, okay? And so far, we've only had these in meme coins. But once these things start shifting, there's going to be floods of insane money coming into crypto. And it's not just going to be retail money into meme coins, it's going to be institutional money into altcoins. Is it possible under those conditions that something like Pulsechain can pull 1.6 thousand fold on your money from right where it's at right now? I have no doubt that can happen. As a speculator, as a professional speculator, I would not be surprised. In fact, that's exactly what I'm expecting. I may sound crazy, but this is the reason why we are in crypto, okay? For the 1,000 fold, for the 10,000. And I actually think it can go higher. And I'm only talking about Pulsechain. There's PulseX. There's Hex, which I think will probably go to all-time highs again and print a new all-time high. There's incentive token, etc. But you should focus on Pulsechain right now because it's going to be like buying ETH early on. That's my opinion. I hope you guys have enjoyed. stack BTC, stack ETH, and above all, if you're not rich, stack Pulsechain, because it's going to be leverage on ETH and BTC. It's going to be 100 to 1000x leverage. Thank you very much. See you guys tomorrow with more updates.